Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Tuesday, August 15th, and then we'll see how things look for Wednesday, August 16th. We had a pretty significant down day. The support that we were hoping would hold at the 50-period moving average for both the small caps and the S&P 500, that didn't hold. There's still some positive things in the background that we can latch onto, but for the most part, we have switched over to full-blown negative. Please be aware that in September, I will be offering an online course. I'm going to do it 2 times. The first class will be from 12 to 1, and that'll probably be a Tuesday, Wednesday, Thursday, and that's based on East Coast time. The other time I'll teach the class will be from 12 to 3 p.m. Eastern time, and we'll just go for 1 day. I will be covering some different topics about how I use technical analysis and my whole approach. I'll also be going through some very basic strategies that you might consider implementing, and I'll also be talking about support and resistance. Now, let's go back and talk about what happened. The S&P 500 found and then lost support at the 50-day simple moving average. We're still above the exponential moving average, but the 50-period moving average is at 44.47. We have a new scenario now. It's starting to turn more negative because there are growth concerns. China had weaker than expected retail sales, industrial production, and fixed asset investment data. They lowered their rates to try to stimulate their economy. Fitch also came out. Remember when they downgraded the U.S. debt? Well, they came out again and warned that they might downgrade the ratings of dozens of additional banks. Then we had some Fed speak. Minneapolis Fed President Kashkari said that banks may need to face tougher capital regulatory standards. So the bank sector didn't do very well on that. All of the bank stocks ended up being weak. Interest rates continue to climb, and that's putting pressure on stocks. On a short-term basis, we have the Stochk RSI, the Williams Percent R, the CCI 14 and 20, as well as the stochastics that are giving us extreme negative readings. In the intermediate term, we're starting to get extreme with the S&P 500 McClellan oscillator, as well as one chart for the PMO studies. The dollar was up and interest rates were also up, and that is also putting pressure on stocks. All of the yield curves that we follow are still inverted. Sentiment is still positive. It ticked down. Where it had been at 65, it came down to 57. And our trend is more neutral. The red line and the green line are right on top of each other right now. However, the ADX is weakening, but it's still above 20, suggesting that we're in a trending environment, but the trend could be starting to weaken. Our bias is negative and our momentum is now negative. Bias is 1 day usually, where momentum is the last 2, 3, 4, 5 days. The economic reports that came out. We had retail sales come in hotter than expected, up 0.7% month over month. They expected an increase of 0.4%. Last time it came in up 0.3%. When you take out autos, retail sales were up 1% month over month. They expected it to be up 0.4%. Last time it was up 0.2%. The Empire State Manufacturing Survey, they expected it to come in at 2.4. It came in at minus 19. Last time it came in at 1.1. When we get to below 0, it shows a contraction in manufacturing in the New York area. Import prices were up 0.4% month over month. Export prices were up 0.7% month over month. So when you look at it on a year-over-year basis, imports were down 4.4% annually and down 7.9% with exports annually. Business inventories came in unchanged. They expected it to be up 0.1%. Last time it was up 0.2%. The NAHB Housing Market Index came in at 50, weaker than the 56 they had expected. Last time it did come in at 56. Here's the intraday chart where we gapped lower and we were negative right off the bat. There was some news out of Russia. Europe had a really rough day. That pushed the U.S. futures down, and we just kind of picked it up and kept going with that. We came down below S1. We didn't make it down to S2 yet. We would make that later. We tried to bounce up, but we came back down around the 44.50 area. Then near the end of the day, we dropped below S2. We did see a little bit of a bounce, but we closed below S2. Here's the growth to value ratio for the S&P where we shot up right out of the gate. So this is somewhat positive. The fact that the ratio ended up finishing positive on Tuesday. Here's a look at our trend where we see the red line and the green line right on top of each other. The ADX is weakening because it's below its moving average, and sometime soon it could drop to below 20. Here's the short-term trend where we have already dropped below 20. The red line's a little bit above the green line, so that would be a little bit more negative, but we're not in a trending environment right now in the short term. Looking at the daily chart, we had come down to the 50-period moving average. Well, we closed below that as well as this pivot level. On the bottom, you can see where volume continues to drop off. Looking at our moving averages, we're below the 20-period moving averages. Now we're dealing with the 50-period moving averages. We're below the simple moving average, but we're still above the exponential moving average. Looking at our trend, and I redrew this a little bit, and please be warned that I draw these lines myself, so they may not be exact. When I first drew this chart, I said we'd come down to 44.50. Well, as we've been coming down, that is redrawn, and we're right down to about 44.38 now. We're wondering, is this level going to hold up, or are we going to continue to fall below that? The NASDAQ also coming back up to its 50-period moving average. That is acting like overhead resistance, and we fell back down. Saw the same thing with the NASDAQ 100. It looked like we were doing a little bit better, only to come back down and close below its 50-period moving average. We're also keeping an eye on two things in this chart. We see the momentum for the PPO of the NASDAQ 100. It is negative. Back in March, we came down to about the zero line, and that's where we bottomed out for the NASDAQ 100. Is that same thing going to happen this time? Looking at the weekly chart of the S&P, we're getting a little bit further below this resistance level. We're seeing pretty much that same thing with the NASDAQ 100. So what's our outlook for Wednesday? We will get some earnings reports coming out, but it's starting to slow down. The technicals are negative, and now we're below the 50-period simple moving average. The economic reports coming out will get the weekly MBA mortgage applications index, housing starts and building permits, which tends to be a leading indicator, industrial production and capacity utilization. We'll get the FOMC minutes about 2 p.m. Eastern Time. We're keeping an eye on all of the geopolitical events, but right now it's about inflation and interest rates, and now we're starting to see more growth concerns. Here's the updated economic calendar, where on Thursday we will get the LEI, and there are no reports coming out on Friday. The Stock Traders Almanac statistics, we're kind of positive here. The Dow is neutral to positive, where the S&P and NASDAQ are just flat out positive when you take everything together. But when we break it down according to a presidential election cycle, we're in the pre-election time right now, where historically we have seen some improvement going forward from here. We're also wondering with the NASDAQ, are we ever going to hit this bottom area and finally start to come back up? It looked like maybe on Monday that was beginning to happen, but we saw no follow through on Tuesday. When we look at the S&P 500 in a pre-election year, we follow the green line, where in August we tend to see some improvement, but we haven't seen that yet. We will be on the 12th trading day of the month. From the 8th trading day to the 13th trading day, we typically see a bounce during this time. We're just not seeing that. We saw it on Monday, but then we didn't see it again on Tuesday. So our scenarios, we're going with the down one right now because our technicals are pointing down. We are negative and we're below the 50-period moving average. We can't go with the up one right now. It's really kind of dangerous to try to front run the market these days. But in the short term, we can go with the neutral trend because our short-term ADX is below 20. It's below its moving average. And if you were to default to something, it would be to the negative side because the red line is on top. Our warning signs, we did see a convergence of these short-term bearish signals. They were coming together. That's produced some of the weakness that we're seeing. We keep asking ourselves after Monday, has it finished? Well, apparently not. It continued on Tuesday. Our longer-term trend signals may be signaling a top. The S&P 500 and the NASDAQ 100 are coming down from the trend line. Seasonally and historically, August tends to be a weak month, but we should be entering a positive time based on what has happened before during pre-election years. The S&P 500 oscillators are negative. We're also keeping an eye on the NASDAQ 100 oscillator, not only because it's negative, but because if we get down to that zero area and start to turn back up, that could also provide some support for the market. The VIX is still showing complacency, but it is starting to climb as we're having more down days. The S&P, NASDAQ, and NASDAQ 100 are now below their 50-period simple moving averages. The cumulative new highs, new lows for the NASDAQ are showing weakness. The 3-month yield is above where it was back in 2007. It was unchanged on Tuesday, but interest rates overall are continuing to climb. S&P 500 growth is weakening, but still in an uptrend, and we saw a little bit of outperformance with growth in Tuesday's session. The weekly pivot that we hit almost 3 weeks ago, that's where we topped out, and we've been coming down since then. The parabolic SAR is negative, not only on the daily chart, but as well as the weekly chart. The vortex is negative, and we're dealing with earnings season, which can be either positive or negative. The positive signs, we still have seasonality and setups that are in the background. They're still there. They're longer term. The daily special K chart is still positive, even though it's rolling over a bit, but the weekly chart is negative. The long-term equity put-call ratio, it's still positive for the market, but it's starting to turn up, so we're keeping an eye on that. The S&P remains above the downtrend channel upper line. I haven't been showing that chart. We're still far away from that line. We're in a risk-on posture, but we've seen that take a hit over the last few days. The S&P is outperforming utilities. The Staples to S&P 500 ratio is declining. The Russell and the small caps, as well as the mid caps, generated recent golden crosses. Small and mid cap growth is positive, and we saw some improvement in Tuesday's session with that, even though we had a down day. The financial sector has generated a golden cross, even though it got creamed pretty good in Tuesday's session. Our conclusion, we are negative and below the 50-period moving average. That's the big picture. In the short term, we're negative and we're becoming more oversold. In the intermediate term, we're also negative and we're showing a few oversold indications. In the long term, we continue to be positive. Thank you. Please feel free to check out the full-length video. I hope you have a great day, and I'll talk to you in the next video.